Hello everyone, it's Friday, October 10. Today we're analyzing the euro and British pound charts to assess potential market trajectories. Yesterday, the euro extended weakness against the US dollar, pressured by uncertainty surrounding the US government shutdown, renewed political instability in France, and the risk of an inflation spike in the United States. On Thursday, some staff members responsible for preparing the US Consumer Price Report were reinstated, with the data now expected later this month. Thus, despite the ongoing shutdown, traders will still have access to key statistics. With inflation concerns mounting, the dollar is poised to maintain its upward momentum. Notably, Federal Reserve officials shifted to a more hawkish tone yesterday, emphasizing caution around further monetary easing. This reduces the likelihood of another rate cut at the Fed's upcoming October meeting. This is a point that traders should keep in mind. Against a backdrop of few major U.S. economic releases, policymakers' statements take on increased significance and could drive the dollar's next moves. Turning to today's macroeconomic calendar, there are no major data releases from the euro area, aside from a meeting of European Union finance ministers, which may warrant some attention from traders. In the U.S., the University of Michigan will publish its survey indicators. Stronger than expected readings, particularly signals of improved consumer confidence and rising inflation expectations, could bolster the dollar. In addition, Federal Reserve officials Austin Goolsbee and Alberto Musalem are scheduled to speak today. As noted earlier, with the Fed's recent shift to a more cautious tone, dovish policy appears to be on hold. The central bank may well opt against a rate cut at its October meeting, especially given the lack of significant economic data. Now let's move on to technical analysis. The 1-hour chart points to a likely correction in the euro-dollar pair toward 1.1589 today. A false breakout at this level will generate a sell signal, dragging the euro down to 15.45. A break in consolidation below this mark would bring the European currency back to 15.20 and possibly open the way to 1.1489. At this level, I would recommend going long on rebound, counting on an intraday correction of 25-30 pips. Long entries at 15.45 and 15.20 should only be considered on a false breakout. If selling activity remains muted at 15.89 and the price consolidates above this level, the euro could recoup yesterday's losses and climb to 1.1627. At this mark, it would make sense to consider short positions on the rebound, targeting a 25-30 pip move. Speaking of the British pound, there is an active battle taking place around 33.08 level. A false breakout at this level in early trade, especially with a light macro calendar, would trigger a sell signal, pushing sterling down to 1.3282. A break below this level would see the pound-dollar pair fall to 32.51, potentially opening the door for further decline toward 1.3217. At this mark, it would be wise to go long on a rebound, aiming for an intraday correction of 30-35 pips. Long positions at 1.3282 and 32.51 should only be considered after a false breakout. However, keep in mind that the bearish trend is still quite strong, so extra caution is warranted with long trades. Alternatively, if the price consolidates above 1.3308, the pound sterling could recover to 33.36 and even 33.64, potentially reversing most of yesterday's losses. Around 33.64, I would recommend going short on the rebound, expecting a 20-25 pip move. Short entries at 33.36 and 33.08 would only be relevant in the event of a false breakout. Best of luck to everyone and have a great weekend.